Hey guys, super happy to be here once again. And today we're with Akshat. Akshat's super happy to be here. First of all, it's a pleasure having again another quant over the podcast. It's always a great pleasure to bring on someone who really know how the mechanics behind the financial markets actually works and really works his way to figuring out more and more and more about this topic. I see this an incredible opportunity to come and speak about quantum and financial engineering in much more depth. And we had a great opportunity and a privilege to have you here today on our show, The TradePod. So first of all, it's a pleasure having you. How are you today?
Thanks, Sophie. Thanks for inviting me on the podcast. All good. How are you doing? Pleasure to be on the podcast.
It's our pleasure. Now, before we'll jump on, can you please tell the audience a little bit more about yourself, and then we'll jump over.
Sure, sure. So, as you mentioned, my name is Akshat. I work as a quantitative researcher in India. So, what my firm does is it's the vehicle that my firm uses to manage money is called a PMS, Portfolio Management Service. It's similar to SMAs in the US, separately managed accounts. So, basically, we trade on behalf of our clients. Our clients typically have the custody of the securities or the stocks that they're holding, and we trade on behalf of them. So we manage close to 500 crore in Indian rupees, which would equate to roughly around $60 million right now. We started around 18 months back, and currently, in the last 18 months, we're sitting at a rupee CAGR of around 44%. And it's since inception, 1 year, like we launched in June last year. So the absolute returns of 1 year was 76%. We run a pure factor-based quant shop. So we use momentum, value, whatever the traditional factors are, and then we rotate between them. And a little bit about my background. So I studied economics from one of uh, I think the most famous Indian university, apart from the IITs, is University of Delhi. So I studied economics back then. I graduated in 22. I did my CAIA Kaya. It's basically Chartered Alternative Investment Analyst. We study about hedge funds, private equity, venture capital. It's just like a CFA for alternative investments. I did my CMT, which is basically Chartered Market Technician. We basically study technical analysis and risk management in that. And I did those things back when I was in college, and I've been
We
doing
had on the
quant.
podcast, we had on the podcast a really awesome guy. His name is Gordon Scott, and he's been an
Right.
offer for the CMT Association for 25 years. So I
Okay.
really suggest you and the other people who are listening to the podcast jump over the conversations with Gordon Scott. He's an incredible trader with an incredible background of about the financial markets in a much more technical analysis sense. So jump over to those episodes. And yeah, I'm with you.
Yeah. So definitely, CMD was a big, I would say, help in understanding how, let's say, I would be able to trade in the short term because whatever I learned in my Kaya, whatever I learned through my peers or through in my college was how to invest for the long term. So CMT did help me a lot in how to figure out patterns. And then through my knowledge of Python, I was able to code patterns that may seem arbitrary to people like they're drawing on charts, but practically you can code them as well. So I did that and then I basically stumbled upon Python and through that, a lot of things happened, and I switched to quant. So I've been doing quant for the last 15 months. Yeah, that's pretty much about it.
Mhm. Now you're a quant for 15 months. Now I think that let me ask you this: when pivoting from quant to um from technical analysis to the role of quant
Right.
engineering, I really think
Hmm.
it's like a major pivot because
Right.
you're looking at the markets in a really different sense. And when you are looking at the markets from a lot of from very different sense, you need to dislearn the things that you used to absorb when you were
Exactly.
technical
Hmm.
analysis. to what you're actually performing nowadays. Now, I would like to ask you about the challenges when pivoting from technical analysis onto the quant engineering, and what have you observed over the transaction between the two worlds,
Right.
because it is a world.
So I would say technical analysis. I may offend a lot of people, but it's heuristics. It's herd behavior. It's herding. It's crowding. So let's say a pattern that has worked. A lot of people are seeing those patterns, and that's why it's working. However, if you look at, let's say, momentum, for example, in reference to technical analysis, you would look at something that's, let's say, trading above a certain EMA, SMA, or let's say two SMAs, short long SMA crossovers for momentum. Whereas in quant, let's say a very simple example is just taking a Z-score of returns in a certain look back period and then ranking stocks according to that. It's just, if I were to define just a simple example would be, let's say I take the traditional academic definition of momentum would be the last 12 months returns adjusted for volatility, and I just remove the last 1 month return. So it's basically if I'm starting today, I'm looking at removing the last 1 month, the 11 months returns before that, and then ranking adjusted for volatility, and then ranking stocks on that, and buying the top decile and shorting the bottom decile. So it may sound a little challenging to people right now. It's that easy to start quant. Like just defining a momentum strategy, it's that easy. And I would say a simple momentum strategy like that, it's quite rewarding for in markets like India, because we are an emerging market and a lot of interest is it's in India. And I think basic momentum strategies are also working great in the last 4 5 years. Like I would say a simple momentum strategy would have made a CAGR of 25% in the last 5 years in Indian markets. I know the markets world over have gone up, but a simple momentum strategy would have delivered you 25 to 27% returns, CAGR returns in the last 5 years. So yeah,
Mhm. Now, you have mentioned that being quant is not not that it's not a very complex task, which I think that everyone's really trying to crack the codes behind the market. Now,
right,
I would tell you this: in order to find an edge, or if you're very eager to find an edge, you really need to be hyper focused on something.
right,
Now, that that of course will eventually yield something that would enable you to have an edge over the markets. Now, what I'm trying to say here is that you really need to think about a really positive way to find an edge. Now, you
right,
came from the CMT, which is the technical market, technical analysis niche, onto the quant. Now, markets tend to act uh, I would not use the word similarly, but I would definitely use the word like in really common sense with with the technical issues,
right,
like if we have like ascending wedge triangles, and of course if we look at the
right,
order
right,
flow behind it, we'll see that there is a real sense behind it. So I would like to ask you now, as a quant, how do you leverage what you have absorbed over the way, and how do you practically implement this into your day-to-day trading?
right. So I would say the things that you mentioned, there's a saying in technical analysis or general in life. I don't know who said that history does repeat. History does not repeat, but it does rhyme. So yeah, some patterns that have happened in the past would replicate in a certain way, not exactly similar to what they have done in the past. So I would say I had to unlearn a lot of things when I switched to quant. I would say I do not use anything related to technical analysis in my current day-to-day life. I do use some signals, some smoothing to signals that I've created through regressions. Let's say I created some regression and I just want to smooth that regression, so I use an EMA. But I would say I had to unlearn a lot of things, how to look at, as I explained, momentum in a quantitative way versus a technical analysis way, or how to look at risk reward from a technical analysis perspective versus a quantitative perspective, because a quant cannot, let's say, trade based on a certain back test. Let's say I have to have a solid out of sample, in sample, and validation data for a strategy, and then only I'll be able to let's say go live with that strategy. So yeah, I had to unlearn a lot of things and pick up a lot of new things, learn some like revise some maths and stats that I learned in my undergrad. So yeah, it has been interesting, it has been challenging. And I'm also
Mhm.
quite new since it's been 15 odd months.
I get it. All right. I would ask you this. Um, being in quant for 15 years had actually enable you to gain more information and of course more experience in this field. I would like to ask you if you were about to plan an alpha on a particular asset, let's go
Hmm.
for options, how would you tackle this problem? Because you really need to think in a really abnormal way in order to construct an alpha that will generate profit over a long period of time.
So the advantage that I have right now is that there has been a lot of interest in India, in Indian options and Indian stocks. So I do not have, let's say, compared to a developed market like the US or the EU, I things become a lot easier for me because there's momentum in everything. There's momentum in stock options, there's momentum in cash market, there's momentum in futures market. So I currently do not have to look for large arbitrage opportunities. If I'm able to capture momentum in certain pockets, let's say through options, through futures, through cash, uh, right now, the market is ripe for momentum in India. Like, even if you ask anybody who's interested in India, the best thing that's working in India right now, it's easy to make money because momentum is working. Let's say if I were to construct, so we do not deal with options right now. We do just hedge our portfolios through options. Since we are running a PMS strategy, we are predominantly cash and we do hedge with some put options. So I would say I would set an objective function that let's say this is my universe, this is the kind of returns or alpha I'm targeting. I would go bottom up, like I'll create, let's say, I would look at what has happened in the past. I would look at, let's say, which fact. So we are like I predominantly am a factor quant guy. So I would let's say model the factors that have worked in certain periods. Let's say I'll use a machine learning model, which I don't want to discuss because we currently don't use. We've tried machine learning because right now we don't even have the expertise as well. Uh, I think Indian markets, a lot of people are not doing machine learning and all those stuff because there is high the data availability for let's say testing a strategy. The reliable data is the sample size is quite small. Like let's say I have clean data for the last 10 years only, so I cannot do a lot of machine learning stuff. And and especially time series predictions through machine learning are quite tough. So we basically try to model which factors have worked when, and try and then we like structure like how much exposure we want to have to momentum. Let's say, for example, in India from 2020 to 2023, value as a factor. Value would be, let's say, the cheapest stocks in the market were the best performing stocks in those 3 years. I think the index only in those 3 years, 2020 to 23, index only went up 4x or 5x in 3 years. So it became easy for us to capture that factor and model it in our in our strategy and mix it with other factors. So let's say in the backtest that we did, we were able to capture the value factor rising at a very initial stage, and we rode it for the good part of 2.5 years in a backtest. And when we went live in 2023 mid, we were able to continue that value momentum tilt in our portfolio. And as the market connected in the last 3 months, we switched to a low volatility factor. So my focus of research, my focus of creating strategies is more on the factor side, not on the option side. So I won't be able to speak much about the options bit that you're asking.
Mhm. Yeah, well, it's a really comprehensive approach. Now, I would like to even take the issue much further.
Right,
Um, you have presented momentum, and you have presented many more different approaches to tackle this issue. Now, I would like
right,
to ask you this: following on momentum strategies and implementing comprehensive approaches using machine learning, if I would have a strategy that I see that I build over time and I see its OOS and its OOS is positive.
right,
In most of the occasions, of course, it
right,
cannot be every single time every single time positive, but let's put it aside for a moment. Now, if I would like to implement it using machine learning, which approach would you take? And well, of course, it depends on which algorithm would you like to use, but I would like to ask you on which approach you would like to take it and what algorithm you prefer the most to implement to implement such a trading strategy. Um, and um, and yeah, like for me it seems the every time the all time doubt when you're facing such a problem. Now I would like
right.
to learn more out of your knowledge and experience. How would you tackle this problem?
So, as I mentioned, that we are primarily a factor-driven house, factor-focused house. So, my most of my research time goes into timing the factors. So, as Cliff Asness, the founder of AQR, mentioned that timing factors is more difficult than timing the market. So, I would say that nobody has been able to time factors because if you look at AQR's return, EQR switched to value in 2018 and it underperformed for a tremendous amount of 3 4 years, very laggard returns because market was more focused towards growth. The tech names, the mega caps were working in the US, and Cliff Asness was more tilted towards value or cheap stocks. So, so I would say the machine learning bit. So I would make it clear that we do not use them right now in our models, but we are researching. So the algorithms that we use these algorithms are quite popular right now in the factor circles. Regime targeting circles are GMM and HMM. So Gaussian mixture models and hidden Markov models. So basically, uh, they help me, like let's say I do an in sample a validation set, they help me know that which factor has worked. Let's say I feed in the model 3, 6, 9, 12-month rolling returns of various factors. I throw in some more features, and I let it kind of model like which state was the market is when, like for a hidden Markov model. And since it's both of them are unsupervised learning algorithms, so you have to use your experience to label that which strategy has worked when. So I would say HMM has given us some, I would say, the results that we can definitely use in a strategy, but right now we don't use any machine learning in our strategies. But yeah, HMM and GMM, I would recommend someone who wants to look at modeling regimes of factors of or whatever features that they have created in their strategy.
Hmm. I understand. Now, speaking about economics for a moment,
Right,
you want to learn a little bit more about economy. You learn economics, and that's your academic background. And I would like to ask you,
right.
how would you leverage those ideas from economically, speaking about how everything should relate to the quant space world?
Sure. So I think macroeconomics and geopolitics are one of the most important things to know. Let's say you may not be able to model a lot of things quantitatively, but it's a must-have to have a view or to have let's say certain awareness about what's happening in the world geopolitically as well as whatever macro is happening. So I would say macroeconomics used in models uh, are quite lagged because let's say for example India, we do not have any, let's say, a representative index of inflation or let's say something or consumer confidence that's coming out weekly. Whatever our PMI numbers, I think worldwide PMI numbers come monthly. So consumer confidence, manufacturing PMI, services PMI. So those getting alpha from macroeconomic signals is quite difficult, I would say, quantitatively. But if you look at the great investors in the world, George Soros or I'm forgetting his name, those guys were great macro traders. So I think I think there's one guy, I am forgetting his name, who runs a macro hedge fund called Macro Synergy in UK. So he uses a lot of data to create macro strategies, macro quant strategies. So I do follow him, if I would recommend people who want to know how to use macro data quantitatively to create strategies. I would definitely recommend them to follow that guy, Macro Synergy. I'm forgetting his name. What's his name? But if you go and search macrosynergy.com on the internet, you will probably find him and the resources. So there are a lot of free Jupyter notebooks, codes, strategies lying on his site that people can definitely access and get some insights from.
There are so many. We have interviewed Jacob Pollock. We have interviewed Tom Banker from AI Quants. We have
Right,
interviewed so many who really spreads their attitude about the market and about how the market is actually moving and
right,
their strategies. And yeah, it lines back on their websites. So yeah, you
right,
should go and follow and see this.
right.
So, Akshat, I really want to develop that conversation onto a really new. I would like to take a new approach with you. All right. Hypothetically speaking, about about establishing a business in the quant world. What do
Right.
you think is the most important KPIs in order to establish a quant business in India? Because
Sure,
first of all, I will highlight several things, and you'll take it from and you'll take it
sure,
on.
sure. Yeah,
Indian citizens are not able to trade the US markets unless you're trading with, I don't know, a sovereign company or elsewhere in another state who will enables US trading.
right.
Indian citizens are not able to trade the US the US markets, only Indian markets. Now, if I would like to not trade the US markets, but to trade the Indian markets, what
Hmm.
would I need to have and what my predict KPIs in order to establish a really good sustainable business in order to manage money for wide variety of people in India?
So you want it from a perspective of setting an Indian entity, or you're setting, let's say, wherever you're sitting and you want to start a corn business in India?
Indian and no, just starting business, just
Okay,
understanding what which KPIs are predictable and how we can solve it you know
Understood.
in advance.
So I would give you an overview of the industry. So a lot of these high frequency trading firms, Jane Street, GNC does not have an office in India right now. It operates Indian markets through Hong Kong. But IMC Trading, the Australia-based market maker, Hudson River Trading, Optiva, all these big guys. Citadel also has some employees in India. So these guys have had an eye on India for a good amount of years. And as the option trading volumes boomed in India in the last 2, 3 years, these guys have been really focused on India. I think you must know that Jane Street and Millennium are fighting a case. So basically, Jane Street had a strategy that was generating a lot of, I think, $1 billion in profit a year based on Indian options. And the three traders who were managing that went to Millennium, the hedge fund. And so within a few months, Jane Street's profit from the strategy fell, I think, for 50, 60%. And Jane Street knew that something has happened. And basically, both of them had a case. And I think that case closed last I think 2, 3 days back, and I didn't read what was the final judgment, but yeah, that was quite messy. So a lot of these high frequency trading guys, the quant guys, are interested in the market making space, the options trading space in India. We have homegrown funds, homegrown firms like Alpha Grep and Prex Quant, then we have Graviton. Basically, these are ex-Tower Research guys. Tower Research is back in New York. I think it was founded in 1998, one of the oldest high-frequency trading firms. So these guys are trading India, but these guys are basically market making and some high-frequency trading strategies. There are not a lot of mid to low frequency quant guys in India. So we are one of the low frequency guys. We run a SMA, a PMS. So I think the KPIs that you're asking, the number one problem in India is data. So we getting clean data, accessible data, cheap data is quite an issue. So we worked with Bloomberg, we worked with Refinitiv, which is now LSEG. We worked with local Indian data providers. We have worked with a company in India that's called CMIE, which is one of the oldest data companies in India. It was started in 1976. So I think getting data and creating like databases out of there for you to test a lot of things is a challenge. And if you can solve for that, that would be, I think you know that a lot of cons say that 80% of time they spend is on cleaning the data engineering and like creating pipelines for those data. I think getting data is the most important thing. Then setting up a quant businesses in India does not have a very high barrier right now because there are not a lot of uh, there are a lot of prop shops that I mentioned that use their own capital or like foreign high frequency trading firms or some LLPs like partners trading, but there are not a lot of client facing quant firms that manage public money, that manage family offices money. So I think that area is still very under penetrated, which we are also targeting. So I think their number one thing would be data. Number two thing would be targeting the right client. So you should be targeting family offices, you offering custom solutions. You should be probably targeting retail. So retail do not have a lot of exposure to quant. You can launch ETFs. You can basically launch a PMS that like what we run. You can launch in hedge fund, which is in India it's called an AIF, alternative investment fund, where the category that an let's say quant hedge fund would lie in India would be a category three alternative investment fund. You can take leverage, you can churn a lot. But I would say I think these are the two, three important areas that one should look for. And I think data is the most important thing. You can find talent. Talent is like we are a lot of engineers. If you have the financial or the quantitative bent, you can hire a lot of engineers and get work done through them.
All right. All right. Now, I would like to tackle with you another problem that I'd like to cover over this call. And I think this point will catches the interest of many people.
Hmm.
When speaking about establishing a business and establishing one business and following the really comprehensive explanation that you have just mentioned, I would like to ask you, um, what what type of colleagues would you plan to have when when executing to such a career path? What people you
Understood.
may look for?
Understood. So if I were to let's say start a new quant firm, I would look for people with skill sets that I don't have. Let's say I have a sense of financial markets. I may create a let's say I have financial markets. I can code. I have some math background. Then I would probably team up with someone who is a hardcore coder who can let's say test strategies faster than I am. I am able to let's say dictate him the logic and he is able to create let's say an engine and test it. Then I would want to partner with someone who has an experience with databases. So I don't want to take the headache of creating the data pipelines and databases. I want to spend more of my time researching new ideas, testing new strategies that I'm reading about in papers. Then I would probably want a guy who would be able to sell the product, because if I'm researching and if I'm more on the investment side, I need someone who would be able to sell. So the person selling our product should also come from a quantitative background. He must have sold quant products, or he must understand what the product is, who it caters to, and how it be able to sell it. And if when I'm moving forward, let's say if I'm to do some machine learning, I take probably hire someone who has machine learning background than rather having someone who has financial background or who knows quant stats, and then he who knows stats and then he goes to apply the whatever he knows to machine learning. So getting a person who has hands-on machine learning knowledge would definitely be a person that I would want to work with.
All right. All right, Akshat. So first of all, it was a pleasure speaking to you today. I really enjoyed listening and actually learning from the things that you said on today's call, and I would like to thank you for participating within our show, The Trade Pod. It was a pleasure. It was an absolute pleasure.
Same here. But thanks for having me.
Thanks for being here. See you next time on our show, The Trade Pod. Until then,
Sh-
take care.
Sure. All the best. Thank you.
Take care. Bye bye.
Bye.